Well, as many of you probably have heard, the interest rates have been cut by 0.25 percentage point by the Bank of Canada. It is welcome news for many buyers, sellers, people carrying variable rate mortgages, and real estate agents like myself. So what does this all mean now that the interest rate cuts have begun? Well, let's look at that a little bit later. But first of all, let's look at the timing of these cuts. Rates coming down could not have happened at a better time. The Toronto Real Estate Board stats are out, and they are telling us that May of 2024 was a particularly sluggish month. Transactions are down 22% compared to May of last year, and the number of listings are up 21% from last year. So we are seeing a little bit more building inventory. Prices are down 2.5% from last May, but they're up a very tiny 0.3% from last April. So what will this rate cut mean for the Toronto real estate market moving forward? Here are three scenarios that could play out. Scenario number one, the rate cut means a whole lot of nothing. Buyer and sellers will continue to sit on the fence, waiting for rates to go down a little more. The market will continue to be sluggish. It may take another cut or two to really get people back in the market before this sluggishness is shaken off and some of the inventory is absorbed in the Toronto real estate market. Scenario number two, the market sparks back up. Now, it's only 0.25 percentage point decrease for those interest rates, but it's the thought that counts. Now, we are going to be switching from a more tentative mindset to a more optimistic one. Usually, when rates start coming down, they continue to come down for a period of a year to a year and a half. So people are going to expect that more rate cuts are to come. We may see that buyers see an opportunity here to get into the market before the rates come down lower and the prices go up from there. So could be a very quick turnaround based on this 0.25 point interest rate decrease. Scenario number three, a fall bounce back. Buyers and sellers will take the summer to contemplate their buys and sells for the fall. When we get to the fall, there is a good chance that the United States will also cut their rates. Canada rarely cuts their rates without the US. The fact that they did it this June without the US is quite unusual. So I suspect once the US joins in, Canada will continue to cut rates, and we will see that rates will continue to go down. That will spur on the market, and we will see a lot more activity. Now, interest rates may not be the only factor influencing the Toronto real estate market, but currently it is one of the most important ones. The 0.25 percentage point decrease that has come out by the government may not seem like very much, but the gesture in itself is important. I think moving forward, we are going to see a much more active real estate market, but let's see what happens. There is a lot more of 2024 to come. I'm David Coffey of Bosley Real Estate.